So Peter Schiff, the avid gold bug and notorious Bitcoin hater, he tweeted this out today. Inflation results in higher prices for goods. Since gold is a good, its price rises along with the price of other goods, preserving its relative purchasing power. Since Bitcoin is not a good, its price does not relate to the price of other goods. So it's not an inflation hedge. So I would disagree, though I do agree with a lot of the things that Peter Schiff says in relation to gold. I would disagree on the Bitcoin part, obviously, because Bitcoin has the unique position of being a good and a currency. And I've said that before. If you don't think that Bitcoin is a good, look no further than those online video games and with those virtual assets that can go up into thousands of dollars, sometimes hundreds of thousands of dollars for a particular knife or a gun or any kind of object. I didn't really understand this. Why would someone pay 10, 20, 100 times what they paid for the game for an in-game item? I didn't understand it until I got into Bitcoin, and I understood that what makes something valuable is the work that goes into it for getting that particular thing. If something comes easy and if it's given away freely, it devalues the worth of that thing. What makes something a currency is a consensus within a community of the value of that particular thing, and the trust that it'll at least retain its value or maybe even go up over time. The funny thing about Peter Schiff is I read that he was actually given Bitcoin by people that wanted him to change his opinions on it, and he lost his keys or something. And he tried calling tech support, and he just didn't want it. He could have had it recovered, but he just didn't want to be bothered, so he threw it away. So this is a video that I found. It's pretty funny. I won't play the whole clip, but the credit goes to Philip Kennedy. You can find him on YouTube. It's Schiff versus Schiff. He's basically arguing with himself over Bitcoin. It's very well edited, so I'll just play a little clip of it. There we go.
Bitcoin is trying to digitally replicate the properties of gold. I mean, that's the whole selling point of Bitcoin.
Let's talk about that, and let's, hopefully we have enough time to really hash this subject
out. And it
out.
does have a lot of gold's properties that helped it succeed as well.
Well, there's only 21 million Bitcoins, right? You can't have any more than that. So therefore, there's some scarcity.
Gold is scarce because it really is
the
scarce.
blockchain is
I
so
knew
great.
about it early on. I mean, not at the very beginning when it was like pennies, but I knew about it before it was $10.
Bitcoin.
There's nothing that I can do with Bitcoin other than give it to somebody else. I mean, that's the whole purpose of it, is to give it to somebody else.
The value of a cryptocurrency is based on the willingness of somebody else to accept it in exchange for for something else.
Some guy was saying 100 million. 100 million of Bitcoin.
There's certainly a bull market in cryptocurrency. I have $100,000 in this wallet. It's here. And I can use it to buy a pack of chewing gum. I could use it to buy a flat screen TV. I could use it to buy a car.
I don't think any of these cryptocurrencies can ever be stable because there's no real value to stabilize.
I can buy tiny things with it. I can buy expensive things with it. And here it is.
Pretty funny. I'll leave you to check it out on your own. So we'll just move on. So in relation to whether one thing is going up in relation to another thing, I choose to look at it in a very simple way to help me understand. It's really about perspective of your point of view of how you're seeing it. This is one of my favorites. The guy on the right says it's a 9. The guy on the left says it's a 6. One person looks at a stock chart or the chart of Bitcoin and they'll say it's going up. Another person will look at it and say it's going down. It's all about perspective. So I put together this little chart to help illustrate how I look at it. And the way I look at it is, and I know this is not really the case, I know they're all going up and down as time goes on, but the way I look at it is an asset like Bitcoin, an asset like gold, the stuff that people flock to in the time of crisis to preserve their purchasing power, the quote-unquote safe havens, I look at them as they don't go up or down in value. They keep their value. They stay the same. It's the currency that goes up and down and inflates and deflates. So let's just take for an example, right? The US dollar, the $1,000 equals 1,000 euros, 0.1 Bitcoin, and 1 ounce of gold. So all these things at this particular point in time, just for argument's sake, equal the same amount of value, right? So, and down here you have a savings account of $1,000. Now at this point in time, that $1,000 can buy you, let's say, 4 shopping carts worth of goods. So now a financial crisis comes along like we had in 2008. You have some bankers that made some bad bets. They did some stupid things and they put the whole economy at risk because of it. The federal government has to step in. They have to bail some of these people out. And the Federal Reserve banks, let's modify this slide a little bit. They come along and they print not a bunch, but trillions and trillions of dollars to inject into the market. Now, what does that do to your $1,000? Now, remember, the euro is not going to be included, just the U.S. doing this. So the euro is going to stay the same, Bitcoin's going to stay the same, gold's going to stay the same. So let's say this inflates the U.S. dollar to $1,250. So $1,250. Because remember, I said if something is given away freely, it devalues that particular thing. So if they're giving money away freely, it makes that thing worth less, and it's going to cost more to buy goods and services than it did before. So now it's going to cost you $1,250 to buy 1 euro, to buy 0.1 Bitcoin, or buy 1 ounce of gold that I have referenced here as a gold eagle, which is currently about $2,000. It's hard to find one under $2,000 right now, a 1 ounce gold eagle. So anyway, what does this do to our savings? Does our savings go up or down in value? Well, it's still the same actually, right? Because it's still $1,000. But what can that $1,000 now buy us? Well, probably only about 3 shopping carts worth of groceries right now, based on the inflation. All because they printed out these trillions and trillions of dollars. Not a very good deal. Not a good deal at all. Not good for savers. And this is why people don't want to save in times like these. They don't want to save. They want to buy things that they think are going to go up in value, or at least retain their purchasing power, like stocks, like gold, like Bitcoin. So let's flip this around a little bit. Let's go back in time. Let's go back to when everything was 1,000 US dollars, and we had 4 shopping carts here that we could buy with our $1,000. So instead of saving 1,000, what we decided to do is, let's get rid of that. We bought a gold coin for $1,000. The Fed prints up their money. It now costs $12.50 to buy 1 ounce of gold. Our gold that we bought now can still buy the same amount of groceries. Maybe, just maybe, one more. A much better deal over time. Now, if Bitcoin and gold, or Bitcoin keeps that same status like gold does and keeps going up over time in relation to the dollar, then you can do the same thing with Bitcoin. Instead of buying a gold coin, you could buy a Bitcoin. But then again, you wouldn't have to sell the whole gold coin. You could just sell a fraction of the Bitcoin. That's the benefit that Bitcoin gives you. So that's just the way I look at it to make things easier in my mind. Remember, it's all about perspective. That's all for now. See you next time.